Mistake number 4, hitting the financial brick wall. Once again, we nearly made this mistake, nearly by about this much. Hitting the financial brick wall is when you buy too many negatively geared properties. The banks start to get a bit nervous. They see you as a higher risk, so they actually stop lending to you. But with hitting the financial brick wall, what we then realised was cash flow was the issue, okay? And most of you in this room would understand that. Without cash flow, you're dead in the water. What we did was we read more books, we went to more seminars, and we found some great people who really understood the concept of cash flow. When we got it, we went berserk, and we actually bought 6 properties in one particular town in Queensland. We just went mad because the return, we were getting like anywhere between 10 and 13% return in rents, which is just absolutely fantastic. So in doing that, we balanced up our property portfolio. It was heavily negative. We went and bought all this positive cash flow and we brought it back to neutral, or now in surplus. And what we found from that, the banks were saying, sure, we'll lend you more money. I mean, we went and knocked on one bank's door and they said, oh, we're really sorry, but you don't fit our lending criteria, because when you kind of get to too many properties, you're outside their square, and then when they try to enter your details into their computer system, it comes up, does not compute. They can't deal with you. They just don't get it. So you just keep trying. And so we went to another bank down the road and they looked at us and said, sure, well, another $1 million tide you over. Same financial statement, same property, same information, but just the lending rules changed. So when you're getting too close to negatively geared, you know, when you're too heavily negative, it's really important that if you want to keep growing a property portfolio, you have to balance yourself. You have to inject some cash flow, and we chose to do it through cash flow positive properties. The key thing here was we actually got an education in finance. I didn't understand finance at all until this happened. So even though it was a mistake at the time, we went almost to the wire. It was the best thing that could have happened to us because I really understand finance now. I have a better understanding of how the banks work and at what point you become too high risk and a bit scary for them. So by keeping it all in check, the banks still want to do business with us. And that's a really lovely way to, you know, continue growing your portfolio without the concern of, are they going to lend us money, are they not?